Green on. I got kind of a green tie, a little bit of green in the jacket here. But we've got our good friend Gordon Fellows, president of the Mississippi Bankers Association, joining us now. I see it. Hey, Gordon, how you doing, man?
Gerard, how are you? Thanks for having me.
You bet, absolutely. Let's start out, if you don't mind. What did you think about Fed Chairman Powell's remarks yesterday?
Well, let me back up from that real quick and say something else about yesterday too. So this is my first time on with you, I think, since PPP, and we had one of our bankers yesterday, Robbie Barnes, who's the CEO of Priority One Bank, testify to Congress, the Small Business Committee yesterday, and he was asked to testify in large part because the community banks in Mississippi did such a good job of distributing PPP loans all across the spectrum. So that was nice to have a Mississippi banker get called to Congress to talk about the smallest of small businesses getting help. That was great. So, and Robbie did a great job. Chairman Powell's remarks, I hadn't had time to read them all the way through. I normally like to watch all that, but certainly I think we all expect a number of rate hikes over the coming months. And it seems like they're going to do everything they can to rein in inflation at the Fed, which is good because it's certainly out there and it's a real thing. So we'll see what steps they take. There was actually one of the Federal Reserve governors was in Jackson 2 weeks ago, Michelle Bowman, who's one of the governors on the board, and we had some really productive conversations with her. The state bank regulator brought her in, and they're really focused on it. And I think they're taking every step they can think of, I think.
Yeah, he of course, the Fed raised the Fed funds rate quarter point yesterday. Some economists a short month or so ago were expecting 50 basis points. We ended up with 25. He did announce to expect 6 more for the rest of the year, with a target being around 2% for the Fed funds rate, which is still very low, of course. And then he said expect 3 or 4 more into 2023. Their target, of course, the Fed has 2 major goals, and that's optimization of employment and monetary stability and price stability in particular. And he said their goal was to get inflation in the 2.5% range by the end of the year. That sounds awfully aggressive to me based on where we are right now, especially with some more PPI data coming in showing that's continuing to rise. But so that was the guidance. I happened to tune in and watched it, but more importantly, side by side, I was watching the market and the intraday chart. It absolutely tanked when he started talking for the first few minutes, and then it made this incredible run up toward the end and closed quite high, mainly because he said, Gordon, this is what I'll be quiet and let you talk. He said, I just don't think we are poised for a recession. And there have been some economists as you guys know, the last couple of months that have said, we may actually see negative GDP this quarter and continue that into next quarter, which would, of course, constitute a recession. He said no. He said all his data suggests that the economy is in good shape, that demand will remain strong, that these rate hikes won't really cause any major downturn in economic activity. And that charmed the market, as they say. Investors jumped all over that. What are your members saying? You got mortgage rates first time since 19 over 4% today is the report in the Wall Street Journal. Are the days, according to your members, are the days of cheap money over? What do you think?
I don't think they're over yet, but there's definitely going to be increases. And you know, from one perspective, that's not a bad thing. The rates have been so low for so long. It's probably time to see some increases. We've probably kind of held them down to below where they would be in a less controlled environment. So maybe that gets us a little more economic normalcy if they kind of start to float up a little bit. So, but I don't know that I don't know that there's going to be a decline in a whole lot of economic activity right now because of it either. You know, and you mentioned inflation too, and I think maybe I'm really here to talk more about cyber, but you know. global conflicts tend to drive inflation too. So, I think they're being smart to get aggressive about it because I worry about what might happen as the stuff in Eastern Europe continues to develop. That might drive a little more inflation too. It might be another contributing factor.
Yeah, well, appreciate that. I'm sure we'll have you on again. You'll break all that down and dig into that. And as I know your members are busy trying to filter through those remarks as well that were a bit confusing. But on the subject, certainly, of cyber and security of digital assets, it's never ends. It's a 7/24 endeavor, and the mistake I certainly from knowing and being in that business, there are a lot of organizations that think, okay, well, I've made my investment and I've implemented some safeguards in some systems. I kind of can wash my hands and I'm done with it. The reality is you're never done with it. You've got to be vigilant 24 hours a day. We've got all kinds of threats now, and a lot of buzz about more threats coming out of Russia, who are quite proficient in launching cyber attacks. A lot of concerns there, a lot of concerns that Trojan horses have been planted and they're just waiting to activate them. But perhaps the pool of information that concerns people the most is their financial information and, of course, their health information with respect to a breach. So it is incumbent upon your members to really ensure that their systems are protected, but it's a never-ending endeavor. We had an example not too long ago from one of your members. We talked about it to tease this segment. BankPlus had a little hiccup. Catch us up on what's going on there.
Right, and so important clarification on the BankPlus piece. That was not a cyber event. That was not a hacking event. That was not malicious. That was a normal course of business software update. And I don't speak for that bank, but as I understand it, one of the vendors lost their accreditation in the middle of running the update, and so the system froze up for about 80 minutes. It was a nationwide thing. It impacted about 60 banks around the country. And after an hour and a half, it was fixed, and nobody ever lost any funds.
Okay.
It just kind of looked frozen on their account. So not a cyber event, not a hack.
Thank you for that clarification, Gord. Appreciate that. Thank you. Yes. Totally understand. Part of the upgrade cycle happens.
That's right. Yeah, and you know more about that than I ever will from your real life world. So, those things do happen. It's kind of like when the GPS tells you to turn left and there's a lake there, not a road on the left turn. Right?
That's right.
Sometimes
that's a good analogy. Yeah.
Yeah. So, but the broader point of cybersecurity is a real one, and we're certainly in. I was in D.C. as part of the American Bankers Association meeting, and we met with the deputy director of CISA. And if you're not familiar with CISA, it's a new federal agency that President Trump established in 2018, the Critical Infrastructure Security Administration. It's part of Homeland.
Yep.
And the deputy director said the same thing you just said, right? He said to the 1,000 bankers in the room, look, you guys are the gold standard. Your industry has invested more in cybersecurity than anybody else that we consider critical in infrastructure. You have the highest return on investment as measurable across all the different sort of sectors of infrastructure in the economy, but don't get complacent. That was his message, right? But everything's going to be targeted. Don't get complacent. Continue to invest, continue to focus, continue to tighten up. And that's exactly what banks are doing. So CISA has instituted what they call their Shields Up program. And that is designed to allow all sorts of private sector places to interface with each other and share news on, potential risk and threats that they may see pinging around in their systems. And we're engaged in that. We've shared information about that with our members. One thing that I think it's critical for consumers in Mississippi to remember, right? Banks are regulated on cyber, right? They're tested against it all the time. We talk about regulation a lot, Gerard, and how banks get over-regulated sometimes. This is an example of good regulation. It helps banks prepare for when there might be trouble. And so, certainly risks are high now, but the preparations have been made for years, right, in case these kind of things happen. And on top of that, right, there's still FDIC insurance, right? So the systems are as protected in the banking industry as anywhere else in the country. And then the money is safe because there's the insurance fund behind it. So I'd much rather have my money in a bank right now than anywhere else, right? There's a lot of security there that doesn't exist in other products.
Well, it makes sense to have a standard set of regulations that everybody adheres to. That's the major, but we all benefit from that when that's kind of handed down like that and established at a central level. That's where it is good. I agree with you on that. Gordon, you want to hang around through the break? I wanted to ask you about ESG. Would you like? Can you talk about that? Kind of what's on the horizon?
Sure,
there?
Absolutely. Yeah.
All right. Gordon Fellows, president of the Mississippi Bankers Association, is our guest on Middays. We'll be right back. We are back in the Middays in the Element Wealth Studios on this
Friday Eve.
We've got Gordon Fellows, president of the Mississippi Bankers Association, on. So a couple of developments with respect to ESG, and I'll let you describe it, if you would, Gordon, what ESG is to our audience.
Yeah. So one other thing on cyber, real quick. So,
sure, please.
We've tweeted today on our account a quiz that individuals can take to help them assess their personal awareness. It's called the Bankers Never Ask That quiz, right? So if you, I think right now, to make sure everybody's staying safe, everybody needs to make sure they're taking personal responsibility for protecting their own connections into their networks, right? So I encourage everybody to take that quiz. Make sure you're familiar with what may be a phishing scam, what may be a malware coming at you. And part times banks are used as a way to try to trick people into clicking stuff. So take that quiz. If make sure you're safe. I got a text yesterday asking me to invest in Hershey's chocolate. That wasn't real, and I deleted it immediately and deleted the number. So just be careful. There are a lot of people out there that are sort of probing right now and looking for individuals that connect, that create weaknesses into the network. So everybody needs to be aware of that. And certainly take a look at that quiz.
Wow. Interesting.
Go ahead. Sorry.
No, that's fine. Go ahead, please. ESG.
Okay. Yeah. So ESG is, it's a sort of bucket of environmental and social governance collected information that private companies use to present to investors traditionally. And now some of that environmental piece is beginning to work its way into policy discussions. And there have been some talk in Washington about, how do banks need to consider climate risk, for instance, as maybe a potential economic risk, and how do they need to think about energy companies and other folks as it relates to potential credit risk that may come with those types of businesses. To kind of get all the way down the road on that, what concerns me is that could become a way for politics to influence business decisions, when it really shouldn't, right? The business, a bank's a private business. The businesses that are in this case, in the energy business, are private businesses, and the bank feels like they need to provide financial services, loan money to an energy company, then they should have the ability to do that. At the same time, if the bank feels like, we really need to shrink our energy portfolio here, we're too over-indexed in one company, the bank ought to have the ability to do that too, right? Businesses do best when they're not forced to make decisions by the government, right? Like let the private sector work. That's kind of where this is. So you kind of saw that play out this week, specifically in one of the Fed nominations. Sarah Bloom Raskin was nominated by President Biden to be a Fed governor. The Republicans in the Senate got really hung up on her, driven some of the stuff she said in the past about the role the financial sector has in specifically in the energy industry. But this whole thing happened before during the Obama administration, and it was about gun dealers, right? There was this thing called Operation Choke Point, and the Department of Justice tried to force banks out of gun manufacture, quit providing services to gun manufacturers and to gun retailers. And, we pushed back pretty hard on that. We're kind of saying now as an industry, look, regulators don't tell us how to handle energy companies. Let us make the decision based on, what our communities need. And that's sort of the net of where this is. I don't know where it's going to end. There are a lot of the folks that the Biden administration are appointing are pretty zeroed in on this. He's not had a whole lot of luck in getting federal bank regulators approved. And so that is interesting to us too. And so I don't know where this all lands because we don't really know where all the people are yet. We don't know who they're going to be yet. We don't know who's going to be sitting in what seats yet.
Yeah. And let's be clear, too, Sarah Bloom Raskin on the record is basically stating that she did not want the financial sector to have any relationship with the fossil fuels industry. I mean, she wanted to somehow, in her role as being a member of the Board of Governors, and I believe, Gordon, that the specific position she would have held had she been approved would have given her very powerful and broad oversight from a regulatory perspective.
She would have been she'd have been the director of bank supervision at the Fed, which would have been sort of the super bank regulator for the country.
And could have potentially implemented such policies that would have forced your members to stop doing business, essentially, with oil and gas concerns, which is crazy. I mean, that's anything but letting the market work. And that clearly is not the role or the function of the Fed. It is supposed to be, by design, an apolitical, separate organization, but she was quite ideological and didn't even attempt to hide it. It was Manchin, I think, that came out a couple of days ago and pretty much said, I can't support her, and so she withdrew her nomination.
That's right. And in a way, as crazy as this sounds, she was more moderate than the nominee to be the comptroller of the currency, Dr. Omarova, who advocated as an academic to completely remove bank accounts and put all the deposits in the country at the Fed and to let the Fed allocate funds to lenders, not banks, but to lenders based on their social preferences, which is a complete change. I mean, a fundamental shift. And so we were glad to see that go away, and we were. That was the first time ever the banking industry that any of us can remember actively opposed a presidential appointment for a regulatory role. Because if you're the regulated entity and you oppose your regulator before they get confirmed, you got a lot of risk there. So that was Dr. Omarova was challenging.
No doubt. We talked about it extensively on the program once she was nominated, and you got access to, and I guess did a little homework to access her resume and her history. And she wrote this paper, I think, called The People's Ledger. And anytime you see the peoples in it kind of has communist connotations. And she really didn't hold back on that. Says, I do think that the government should manage and control bank accounts, individual bank accounts, but more importantly, allocation of capital. I mean, that's what she wanted that role to be, as opposed to a more nuanced and limited regulatory role. But it's disturbing, is it not? And I got to believe your members feel this way too, that they even make it, people like that with those philosophies even make it to that level. Because you just wonder, when are the stars going to align when you can't stop it, and the next thing you know, they're in those roles. Gordon, that would have wreaked havoc on your industry. You know it.
Well, and what's really frightening about it is it's coming down to three people. It's Joe Manchin, Kristen Sinema, and John Tester, and maybe Mark Warner on that one too. So maybe four people, but it's such a tight margin in the U.S. Senate right now, and I mean there are a lot of things that could tip one way or the other, and it's really coming down to a really small group of people that get to be the decision makers, and it's frightening.
Yeah. And we should also point out, I believe this is true, Gordon, help me out, that as part of the plans for ESG regulation and policy with the controller and even the SEC, you guys, your members would have to literally develop a plan and show how they could be resilient and survive massive climate change.
Right. That's right. And our response to that so far has been, look, the banks on the Mississippi Gulf Coast have been banking through hurricanes for generations. We know how to do it. The banks in North Mississippi have been banking through tornadoes for generations. We know how to do it. I don't know what that's going to mean for community banks, which are mostly our members. My members are local banks, and what we've heard from the acting comptroller of the currency, Michael Sue, has been continuously, I'm focused on the big national banks, the banks that are globally systemic. To quote term in Dodd-Frank, they're not as focused on this for community banks, but there's always a trickle down, right? And that is concerning, but it's to be determined. We don't know where it's going to land.
Yeah, totally agree. But it just seems like we're moving, as you pointed out earlier, more towards the political slant rather than the business aspect of things. And the bottom line is, it costs your members money. That costs us all money. It's the bottom line of how that works. Mm-hmm. Costs everybody. Yep. Gordon, appreciate you coming on today. Enjoyed the discussion, sir, and the insight. And I'm sure we'll talk to you soon. You take care.
Thank you for the opportunity. You do as too.
You got it. Middays will come right back from the Element Wealth Studios. The Dow up 152. Stay with us.